Hello everyone, welcome to the Stock Minds web channel. In Q2 2025, QXO Inc., NYSE QXO, delivered a striking performance that underscores both strong growth potential and improving fundamentals. After acquiring Beacon Roofing Supply earlier in the year, the company reported dramatically higher revenues, improving margins on a non-GAAP basis, and signs of integration success. In this video, we will dive into QXO recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About QXO. QXO is the largest publicly traded distributor of roofing, waterproofing, and complementary building products in North America. Its strategy is to become a tech-enabled leader in the roughly $800 billion building products distribution market through both acquisitive and organic growth. The firm is led by Brad Jacobs, a serial entrepreneur known for building large-scale companies via aggressive M&A and operational transformations. The acquisition of Beacon Roofing Supply, completed on April 29, 2025, for about $10.6 billion, was a key milestone in its plan to reach $50 billion in annual revenues within the next decade. QXO financial performance. In Q2 2025, QXO delivered striking year-over-year improvements across key metrics. Revenue for Q2 2025 reached $1.9 billion, a dramatic surge from $14.5 million in Q2 2024, while earnings per share, EPS, narrowed to a loss of 15 cents compared with a loss of $9.93 a year earlier, an improvement of 98.49%. On a trailing 12-month TTM basis, revenue climbed to $1.95 billion from $57.13 million, and EPS improved to a loss of 25 cents from a loss of $12.53, representing a 98.01% year-over-year gain. Profitability metrics also strengthened, with a gross profit margin of 25.61% and a net profit margin of -1.1%, while return on assets stood at -0.28% and return on equity at -0.39%, reflecting the company's ongoing investment phase. Leverage remains conservative with a debt-to-equity ratio of 0.42. Over the past 5 years, QXO's revenue has grown at a 135.6% CAGR, while net income and free cash flow are still negative. QXO's revenue increased tremendously in 2025 due to the acquisition of Beacon Roofing Supply in April 2025. QXO Fiscal 2025 Financial Forecast. Looking ahead, Wall Street analysts project 2025 revenue of $7.13 billion, up sharply from $56.87 million in 2024, and forecast non-GAAP EPS of 35 cents, a 95.3% increase over 18 cents the prior year. Wall Street sentiment is notably bullish, with a strong buy rating, a consensus price target of $33.73 implying 61% upside, and the highest target price of $50 that suggests potential gains of up to 138.7%. QXO stock price performance and valuation. At the time this video was created, the stock was trading at $20.95 per share. QXO's stock has delivered impressive gains over the past year, climbing 52.3% that handily outperformed the S&P 500's 17.2% rise during the same period. Over a 5-year horizon, however, the stock has gained 14.8%, underperforming the S&P 500's 99.6% increase. From a valuation standpoint, QXO trades at a price-to-sales PS ratio of 4.99 on a trailing 12-month basis, with a much more attractive forward PS of 2.01. Its non-GAAP price-to-earnings PE ratio stands at 90.75, but the forward non-GAAP PE drops to 60.73. While these multiples appear elevated compared to mature companies, they become reasonable when viewed alongside the company's rapid revenue expansion, improving profitability, and strong analyst forecasts. QXO growth potential. QXO growth potential remains strong, driven by several factors. 1. Major platform acquisition and market entry strategy. QXO's $10.6 billion acquisition of Beacon Roofing Supply in April 2025 marked a transformative market entry, instantly making QXO the largest publicly traded roofing and waterproofing distributor in North America. The deal brought QXO a vast network of 580 branches and over 110,000 customers across the U.S., delivering significant scale advantages. This acquisition underscores QXO's aggressive strategy to consolidate the fragmented $800 billion building products distribution market, which includes around 7,000 distributors in North America. CEO Brad Jacobs envisions leveraging this acquisition as a foundation to reach $50 billion in annual revenue within the next decade, replicating his successful roll-up playbook from United Rentals and XPO Logistics. Integration is ahead of expectations, with broad initiatives underway across pricing, procurement, sales, organization, and logistics, aimed at least doubling legacy Beacon's EBITDA organically. 2. Market consolidation through strategic M&A pipeline. QXO's growth strategy focuses on consolidating the fragmented building products distribution market through disciplined mergers and acquisitions. With $5.1 billion in cash reserves from recent equity and debt raises, the company is well positioned to pursue acquisitions across roofing and complementary verticals such as insulation, HVAC, lumber, plumbing, and electrical. QXO's acquisition pipeline extends beyond roofing, enabling diversification while capturing synergy opportunities. The Beacon deal, valued at a 10.8x multiple of 2025 consensus EBITDA, reflects QXO's disciplined approach to accretive valuations and effective integration of large-scale transactions. The industry's fragmentation, combined with favorable secular trends such as undersupplied housing, aging infrastructure, and rising commercial construction demand, creates abundant consolidation opportunities for QXO as a capital-strong acquirer with operational expertise aiming for leadership in the $800 billion building products ecosystem. 3. Long-term revenue scaling and industry leadership vision. QXO aims to achieve $50 billion in annual revenue by 2035 through a combination of strategic acquisitions and organic growth, capturing about 6% of the building products distribution market. This growth is supported by strong secular trends, including the U.S. housing shortage, aging infrastructure, government spending, and data center construction. The leadership team brings deep experience and aligns compensation with shareholder value by tying incentives to outperforming the S&P 500's 55th percentile. Financial projections foresee $4.5 billion in EBITDA by 2030, with analysts valuing the stock around $50 per share. With a projected $2.24 trillion global market by 2030, QXO's first-mover advantage in technology integration and consolidation positions it to lead the industry while delivering significant operational improvements and shareholder returns through strategic scaling and market leadership. Risks to consider. While QXO prospect looks attractive, we should be mindful of potential risks. 1. Acquisition integration risks. QXO's acquisition of Beacon Roofing Supply, valued at approximately $11 billion, is a major step in expanding its presence in the building products distribution industry. However, this aggressive growth strategy carries risks such as cultural clashes between teams, unforeseen costs during integration, and challenges in realizing expected synergies. These factors may hinder business performance and delay the full benefits of the acquisition. 2. Increased leverage and debt obligations. QXO issued $2 billion in senior secured notes due 2032 through its subsidiary to finance the Beacon Roofing Supply acquisition. This raised the company's leverage, creating higher debt servicing risks, especially with fluctuating interest rates. The notes are secured by liens on most of Beacon's assets, and the offering targets qualified institutional buyers and certain non-U.S. investors. This move supports QXO's growth ambitions, but increases financial risk. 3. Macroeconomic and industry risks. Inflation, rising interest rates, and slower construction activity all pose risks to QXO. These factors could reduce demand for its roofing products and materials, while also increasing operating costs. Together, such economic headwinds may negatively impact QXO's revenue growth and profit margins. Prolonged economic uncertainty in the building and construction sectors could pressure QXO's overall financial performance and operational efficiency. Conclusion: QXO's Q2 2025 results highlight a company transforming into a high-growth industry leader. Revenues have surged, losses narrowed sharply, and analysts expect continued momentum with strong earnings gains ahead. Despite premium valuation metrics, forward PS and PE ratios point to rapid growth that can justify the price. With conservative leverage, bullish analyst targets up to $50, and a massive market to capture, QXO offers investors an attractive blend of expansion potential and improving fundamentals, making it a compelling long-term growth opportunity. But remember, this is not a financial advice. What do you think about QXO? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.